It's Wednesday. Let's take a look at some DeFi charts over here on Brave New Coin. We'll start with the TVL discussion. Took a big hit May 18th, obviously, with a massive downswing in price. Lots of price appreciation that brought us here. So unless all of the TVL is stablecoins, price depreciation will be apparent on this metric as well. So TVL overall still looks okay. You know, it looks better than the charts do. Price-wise, the DeFi charts for the most part look rather atrocious here, and I'll go through them. Interesting that Curve is ahead of the TVL wars now with that depreciation spike, thanks to being mainly comprised of stablecoins. The DeFi perp continues to ride the struggle bus below the 200-day moving average, basically on the cliff's edge of this support. It's kind of do or die here very shortly, especially with volume dropping off significantly since the May 18th, down spike, May 17, whatever it was. Big volume spikes here, volume goes to nothing, then we get another volume spike, when this breaks, right? Like this is going to it's going to do two things, okay? It's most likely. It's going to either slow bleed for 6 months, or we're going to keep spiking down until we reach back to these January breakout points, and that's on every chart. Some of these are closer to their January breakouts than others, but this has a long way down to go if it is going to break down, which I think is the most likely case here. It's below all this volume, which at this point looks like distribution. So path of least resistance is down with a support significantly lower, and it's also below the daily cloud. So trend metrics are telling you there's really no reason to be long DeFi on aggregate here. There are a few stronger charts or charts that look slightly better than others. This is Link Pitchfork since 2018. So it's held this trend. It's tried twice to invalidate the Pitchfork here, and it's been unsuccessful. The prior two attempts, and now we're kind of still sitting at this low here. So if we do have a candle close below the Pitchfork, that likely invalidates the multi-year trend. And the more closes you get outside of the Pitchfork, the worse and worse it gets as far as invalidation and bear trend confirmation. Another way you can look at this is the 50 and the 200 cross, which have been bullish since 2019, are again at risk for a bear cross up here. So it's been a good run for a lot of these alts. This is down to a quarter, 25 cents, right? You can do the math on the percentage there. That is a significant run. Okay. Significant. So you can't be disappointed, obviously. Not all of us got in at the bottom, but it's important to be realistic with charts that look like that up here. Here's Curve, which is also below the 200, below the cloud. You're going to hear me say that on basically every chart. Path of least resistance is down. I like $1. So that's a 50% drop, right? I like the January breakout. That's $1 or less, somewhere around 55 cents. So that's a 75% drop or whatever it is. It's a long ways down on a lot of these charts. No bull div here, no nothing. Strength would be anything above 280 for Curve. AAVE, very similar to Link. Bullish since 2019, threatening a close below the Pitchfork or several closes below the Pitchfork, below the 200-day moving average, below the cloud. It's just, there's no bull trend, anything here. It's much easier to buy strength than buying slow bleed. One thing that could be bullish, if I'm looking for things that are bullish, is a potential RSI bullish divergence. When you have a RSI that doesn't really make a lower low and you get prices making lower lows, you can think of that as a bullish divergence. So maybe this is in a bull div since March. It's certainly holding up better than a lot of these other charts, but as the moment this thing closes, it's got like a week probably max to make a decision here at 300. If 300 can hold, I like 750. If 300 can hold, I like 85 or lower, 85 to 50. So it's a big decision point here on a lot of these charts. Maker looks like a descending triangle. Love Maker. Love the protocol. You know, this isn't me not liking any of this stuff. It's just, this is the chart. No bull div here just yet. Sort of cliffing on the 200-day moving average. And we'll eventually see a bearish 200-day cross on Maker as we get lower lows. So really, this could go to sub 950. You know, again, January breakout is all the way back there. Here's comp. Comp has a bullish divergence, unlike a lot of these other charts. Not that it's exactly a buy, but it is below the cloud. It is below the 200. Supports sub 175. It's setting itself up for a death cross. It does have a pretty massive TKC clamp here on the daily, where the mean is all the way back at 600. So it's hard to get super ultra turbo bear at this point in time. Seeing that, you know, that's a type of bullish divergence along with RSI divergence, but I'm still not buying it, right? Like the trend is just junk, bunch of junk here on comp. Wi-Fi bearish 5200 cross on the 12-hour. It's got tons of volume below this, but if that starts to break, you know, this could go, you know, this could revisit sub 10,000 on Wi-Fi. There's some support at 13. It's just, for me, it's just easier to buy this stuff when it's on sale, right? Like right now it looks expensive, and it's going to look cheap when it's 50% off. And even if I'm wrong in that everything's going to sell off or quickly or slowly, then you know, you just buy the strength. I have no problem buying higher. Just right here, just that does not look good. Uni looks okay relative to everything else. It's below the cloud, above the 200 period moving average, but January breakout was $5 or less. It's at 22. You know, tons of downside there. Doesn't look good. Sushi, a slightly different iteration of the Uni chart, below the 200, below the cloud, setting up for a death cross. Uni's also setting up for a death cross. Yearly open was like $2. It's at 830 right now. And in a bear market, all of these charts should correlate pretty closely, 80 to 95%, I would imagine. Here's Sushi on the non-log chart. That's even scarier. Maybe you could argue a falling wedge here on the linear chart, but you know, I'm not buying this chart ever. Sorry. I'm buying it in the despair lows. I'm buying everyone else's dip sells, basically. Anybody that's buying the dip here is going to start panicking sooner or later. And that'll force this lower, and that's where I'll be buying, down there on the pillowy cushion of $2 support. Balancer has a slight bullish divergence, very similar to the comp chart. And as you look at these together, you know, Uni and Sushi look very similar. Bal and comp look very similar. If you start to get bullish on Uni, you can't not get bullish on Sushi if the charts are correlated and look similar, right? And the same thing with Balancer. If Balancer sells off to 16, you know, that's kind of the yearly open on this falling wedge bull div, then I'm going to be buying Balancer and I'm going to be buying comp, right? The charts are very close. Fractal wise, they look very similar. Bearish 5200 cross here below the cloud, TKC clamp, right? Like this could take a while to play out, but that's one of my favorite trades is a falling wedge with a div or a rising wedge with a divergence. So I will happily buy anything below 16, but right now that looks not great, even if you're hoping for a mean reversion. Just everything else looks really bad right now. Here's SNX on KuCoin. SNX has been having some issues with collateral and collateralizations, more specifically because it is a single collateral as far as the underlying is concerned for the synthetic assets. So if SNX starts to sell off, you have to continue to add collateral in the form of more and more SNX as that collateral continues to depreciate, right? There was a big on-chain long that was basically liquidated and that was being sold off. And we probably saw some of that here. I'd have to go back and look, but some of this capitulatory stuff is liquidations of the underlying assets for these lending and borrowing type platforms. But even still, I mean, we have a bear div on a death cross, and I'd much rather buy it much lower than this. $3, $4.50, something like that. Tons of volume here on KuCoin. I don't really trust the volume on KuCoin, but it's interesting that we're now below all of that this tried to falling wedge, this tried to inverted Adam and Eve. It tried and tried and tried and just couldn't muster a breakout. BNT below the 200, setting up for a death cross, setting up for a descending triangle, setting up for a 50% sale, like everything else. Yearly open was around $1.20. So I don't know, anything $1.20 or lower looks decently okay to me. REN already retraced to its yearly open, and if everything sells off, REN could retrace to basically this previous resistance at 5 cents, 5, 6, 7, something down there. Tons of volume down there. Death cross on the daily. None of this. Again, this isn't bullish. This doesn't look bullish. It's not setting up for anything that looks bullish. ZRX, death cross on the daily, ready for new lows, ready for 32 cents. All this stuff down. It may find support at the previous sort of triangle point consolidation around 50 cents, psychological support there as well. But I like a 50% off sale on ZRX. Not quite a bull div either just yet. That's one thing to watch for all of these. If they do sell off, watch for that bullish divergence, because that'll give you some idea as far as waning bearish momentum. Here's 1 inch, which looks different than everything else. Actually looks pretty decent. It's still below its previous consolidation support. So I would like to see it above 390, $4 with a bullish 5200 on the 4 hour. Not a lot of trading history here, so you can't really zoom way out. But at the very least, this is making higher highs and established some sort of support down here at 250. They had some announcements with integrations, I don't know, Zignum or something. I can't even remember what it is, never heard of it, but I think that's what played a role here. And 1 inch had broken out actually before everything else. It had this W breakout. So that was when I was more bullish back in here. We looked okay in here, right? There's a difference between setting up for a bullish reversal and now we've got M double murder, inverted cup and handle. I don't know. Like none of this here looks bullish at all. But 1 inch looks much better than most everything I've looked at. Melon also looks decent as far as on trend. It's Enzyme, which is the token for the non-custodial portfolio management tool. Enzyme.Finance is the name of the website or app, and you can follow along on the fund and DeFi portfolio I'm trading for Techemy Capital. You can see AUM performance, trades, allocations, everything I've done. It's all here. I have the ability to lend through AAVE and some other yield platforms. But you can see in the DeFi portfolio, it's basically Melon, Curve, Link, and AAVE. We had at one point 15 to 20 DeFi blue chips in here, but now it's just a DeFi graveyard as these lows continue to look like they're going lower. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.